Welcome back everyone to another market review for E-mini NASDAQ, and today is Tuesday, September 3rd, and we're just coming off of a Labor Day weekend, so I hope you guys enjoyed that Labor Day weekend. And something I want to know before we begin, for Labor Day trading, I highly recommend, many of you guys should just consider skipping it. You don't really want to be engaging in a condition where the market is just opening back up again after being closed for 3 days. So I know we did technically do an early close at 1, but again, it's better to let the market on, especially on Tuesday, just let it do its thing, open back up, and wait for a better setup. You're going to be more in favor on a Wednesday or a Thursday for these kind of days. But it is NFP Friday, so honestly, I would just stick to Wednesday, which is tomorrow, and maybe Friday, depending. But Wednesday most likely will be the best day for most traders out there. But I'm going to show you guys as to why conditions weren't really there for anyone trying to trade in these conditions overall. But jumping right here on the daily, really the main levels I had was I was looking for price to go long. Remember, we talked about this breaker here on the daily. I wanted to see price support that, and we continue heading higher. I had a couple new day opening gaps as well. I had this new day opening gap right here, and then I also had the current new day opening gap, which was right there. But again, my main focus really is up here. There's going to be buy stops right above here because they're really too clean, these highs, and I want to see price fill this inefficiency right here, and then I have the consequent encroachment drawn out as well. But from the looks of it, price seems to be drawing towards this fair value gap down here, and I also drew out consequent encroachment of it. We've already tapped into the high of it, as you can see right in there. But really I want to see if we can dig into that and get into the consequent encroachment of it going into the day tomorrow. But again, jumping right into the 1 hour now, as we can see here is an hourly sell side I had marked, and then I also had this hourly sell side as well. And again, going into the day, I wanted to go, my main idea was to be bullish just because number one, we have that larger daily draw right up here with those clean highs. But not only that, we have these really clean highs up here. We have 1, 2, 3, 4, 5, 6 clean highs up here where retail is just stacking up orders. I mean, the amount of buy stops that are going to be above here is absolutely astronomical. You can only imagine because it's so clean. Retail is seeing this as a resistance level. So I wanted to see price to see if it wanted to go back up in there and take out buy stops, or even up into here to this inefficiency, and we would call it a day there. But as we can see, price just completely sells off, and there's no tomorrow. But again, like I said, we're really below that midnight opening price, and we were also really below 10 a.m. opening price. So we're in a deep discount, and I wasn't looking at any sells at all going into the day. Jumping right into this 15-minute, again, I didn't also have anything else. Same thing as before, we're trading into a deep discount within that session. So again, no selling for me. I was just thinking of buys. And again, on the 1 minute, really taking an even closer look at this, it's just chop. So this is what I was talking about earlier, where these days are best to just simply tape read or skip. But again, if your particular mall allows you to trade in certain conditions, it doesn't have to necessarily be, oh, if it's Labor Day, I can still trade a particular type of style or structure or pattern, whatever it is. That's totally fine. But if any of you guys are struggling, it'll be better to probably place yourself in a better scenario, which is skipping these days. Like, look at this. We're just literally consolidating throughout this. If I draw out a channel here so you guys can see, price is literally just chopping in all this. There's no direction, nothing. It's just chop the entire session. Even before then, we were already chopping. But again, like I said, I was looking for us to do something here, displace higher, show me something where he violates bearish PD arrays, and then we can start to head higher up into that hourly that we were looking up. Even here, let's say we don't get up into there, like I said, but take out at least all these buy stops that are going to be residing above these highs. But as we can see, we just continue to sell off. This is even more chop. It's just consolidation. All this is just chop and consolidation. So it's not really ideal to be trading in these kind of conditions. 2 p.m. starts, we immediately sell off, chop once more again, and then we sell off, hitting that hourly sell side to then consolidate again, leading up to where we are now, which is Asian session. So all in all, this is definitely a very good tape reading day. or just sit back, relax, take notes, and study. That's it. Don't try to engage in this kind of price action because, I bet you right now a lot of accounts were blown today. If not blown, at least a lot of drawdown was made as traders tried to force themselves in these trades. But in these conditions, coming back from that Labor Day, it's not really something you want to be engaging in overall. All right, so heading over to DXY to show you guys what I was looking for DXY, and starting on this daily chart, as we can see here, I was looking at this new day opening gap as possible resistance on price, seeing if we can come down into this low resistance liquidity type of environment. We also have a breaker here with a low, high, lower low, higher high. There's that up close candle, and you draw that out. We see prices interacting with it, so it was in a little bit of a tricky spot where you have the breaker, but then you also have the new day opening gap. But again, ideally, I wanted to see some bearishness, see if we can, sort of dig our way into this type of wick here, or even come back a little lower and filling this breaker even more. And then jumping to that 1 hour chart, right away, what I'm seeing is a market maker sell model. We took this buy side liquidity here that we talked about last week. Now, why was I looking at this as a potential draw for the week? Simply, it's just like I said before, it's really clean. You have all these highs up in here. What's going to be up above these? Buy stops. So then it goes back to what I talked about on NASDAQ, where above these highs are going to be buy stops. They're very clean, and there's going to be buy stop orders all above that. And another thing here is going back to the market maker sell model. As we can see, we have consolidation again, consolidation all throughout here. So already we're getting the signs of a market maker sell model. Price just keeps building up into a premium, indicating that eventually this will sell off. We don't know, obviously I'm not going to know exactly when, but just based on this new day opening gap reaction, it's either we drive price up into this inefficiency right up here, and then I want to see some bearishness from there, or we just go down from here. But we are definitely in a market maker sell model, almost $4. So I want to see how it's going to continue for tomorrow's price action going in. And then going on the 1 minute to show you what I was looking for on the session. Like I said before, let me take this out so you guys can see. We're below that midnight opening price and he's moving upward. Again, that's not what you want to see. On days where you have that really good divergence between the two, ideally you do want to see dollar above. For example, since you want dollar to go down and NASDAQ to go up, you'd want to see DXY above midnight open selling off during this session, not buying below during that session. That's not something ideal you want to see, because then you have confluence rather than divergence. But again, like I said, it's very understandable. We just came back from Labor Day weekend, so the markets are just opening up and they're not going to be as clean as they usually are. So really tape read, take it, just, build that discipline to where, you step away from the charts, or if you're going to stay on, no FTMO, no top step, just simply sit back, relax, and tape read. Take notes so you can really build your discipline in that model, and you're not going to get chopped up by the market from these unfavorable conditions, which ICT talks about as well. So once again, I hope you guys enjoyed this video. Please feel free to like, comment, share, and subscribe, and I'll catch you guys in the next one. Peace.